You know, the market has a way of teaching a man more about himself than he ever cared to know. I've always said the stock market is never wrong, but the men who trade it almost always are. And when I look at the mistakes that wipe out traders, whether they're green beginners or veterans who should know better, it comes down to two things: greed and bleeding money. If you don't learn to control those, the market will do the teaching for you, and the tuition is mighty expensive. Tell me, have you ever been in a trade that was working out just fine, giving you a nice profit, and instead of taking it when you should, you held on, hoping for just a little more? You thought, it's moving so well, maybe I'll double it, maybe it'll run forever. And then what happened? The market turned, as it always does when you least expect it, and that paper gain you could have cashed out with pride turned into a loss that hurt like a knife. That's greed. That's the enemy. Now, I never knew a man who went broke taking profits, but I've known plenty who ruined themselves waiting for a profit to grow into a fortune while ignoring the simple fact that the trend was already done. You've got to remember, the market doesn't owe you a thing. It will not reward your hope or your wish. It pays only on judgment, patience, and discipline. Do you have the nerve to step aside when the tape tells you it's over? That's the real test. And here's the thing about bleeding money. Every trader who ever lasted more than a season learned this. You can't sit and hope your losses come back. That's the quickest way to bankruptcy. The public does it all the time. They buy a stock, it drops. They say, well, it's just temporary, I'll hold on. The stock drops further, and they say, it's cheap now, I'll buy more, lower my average. And they keep doing that until the stock isn't a trade anymore, it's a disease. The bleeding gets worse, and the patient doesn't survive. Why let yourself bleed? If you cut your losses quick, they stay small. But when you hesitate, when you convince yourself that it'll turn around, that's when the market takes your whole pocketbook. The very first loss is the best loss, if it keeps you alive for the next trade. Have you thought about that? Whether you'd still be in the game today if you had just cut that one bad trade when it first went against you. I learned early that money isn't made in constant trading. It's made in sitting tight when you're right and cutting quick when you're wrong. The big money is in the big swing, not in scalping every little move. But greed gets in the way, doesn't it? A man thinks, I'll just squeeze another point, another tick. That's how a profit trade turns into a loss. The market doesn't whisper in your ear when it's done. It just turns, and if you're greedy, you're the last to notice. Now, look at the charts. They don't lie. The price action is the only truth in this game. When a stock breaks out of a base on strong volume, that's the market's way of speaking. When it rolls over, making lower highs, losing its momentum, that's another message. Do you listen, or do you talk back? Most traders talk back. They argue with the tape. They say, it can't go down further. It's already dropped too much. That's the surest way to keep bleeding. Let me ask you, do you treat your trading capital like a soldier treats his ammunition? Because that's what it is. Every dollar you lose unnecessarily is a bullet you won't have for the real fight. Bleeding money isn't just about losses on paper. It's about losing the chance to act when the right setup comes. And the right setup doesn't wait around for you to nurse your wounds. It shows up, it demands readiness, and if you're strapped from trying to recover losses, you miss it. That's worse than the loss itself. Greed. Now greed makes a man chase tips, chase rumors, chase stocks that have already made their move. It makes him buy when he should be patient and hold when he should be selling. Greed whispers, this one will make you rich if you just hang on. But the truth is, in this game, you don't get rich quick, you get broke quick. Do you remember the last time you chased a runaway stock? You thought you were jumping on a train going to the moon, and all you caught was the last stop before the crash. That's what greed does. I always kept to this: never average down, never add to a losing position. That's not trading, that's gambling. That's putting good money after bad and calling it strategy. When a trade goes against you, the market is telling you you're wrong, and the market is always right. The only choice is to accept it, take the loss, and move on? Do you want to trade to prove you're right, or trade to make money? Because you can't have both. And here's the secret most don't want to hear: wealth in trading doesn't come from hitting every move. It comes from preserving your stake, from letting the market show its hand, from taking only the clean, high-probability setups. The rest is noise. But the trouble is, noise feels like action. Greed feeds on noise, makes a man think he's missing out if he isn't trading all day, every day. The truth is, the best trades often come after long waiting. Can you sit on your hands while others chase? Or does your greed drive you into bleeding money on low-quality trades? I've seen men ruin themselves not from lack of brains, but from lack of control. A man can be brilliant, read every chart perfectly, and still end up broke if he can't master his own impulses. That's what this really is: a game against yourself. Greed makes you blind, and bleeding money makes you desperate. Desperation is the worst trading partner you can have. Do you notice how your judgment changes after a bad loss? You start seeing setups that aren't really there. You start forcing trades, not waiting for the right ones. That's bleeding money through the mind as much as through the account. Look back at your trades. Do you know how many of your losses came because you didn't listen to the chart but listened to your own hopes instead? I'd wager it's most of them. The chart is clean. It's unemotional. It says exactly what's happening. But greed and fear put words in its mouth, make you see what isn't there. You say, this stock has to bounce. The chart says it's breaking down. Which one is right? The chart never lies. And when you control greed, something remarkable happens. You start to see the market clearer. You stop chasing, you stop forcing, and you start waiting. That waiting, that patience, is what separates the successful trader from the poor fool who can't stop bleeding money. But here's the hard truth: patience feels like doing nothing, and most men can't stand doing nothing. That's why they fail. Do you have the stomach to do nothing when nothing should be done? I've always said that trading is simple, but it isn't easy. The rules aren't complicated. Cut losses, let winners run, follow the trend, don't fight the tape. But simple rules don't make them easy to follow, because the enemy isn't the market, it's your own nature. The market only reflects what you are willing or unwilling to control. Greed is inside you, not in the chart. Bleeding money is the result of choices, not of chance. Do you see that yet? Think of it this way: every dollar you save by cutting losses quick is another chance to ride a winner when it comes. Every trade you don't take out of greed is one less mistake you'll have to pay for. The man who lasts in this business isn't the one who grabs every profit. It's the one who avoids destruction. That's the real secret: not making money, but keeping it. Have you thought about how much richer you'd already be if you had just kept what you once made? Desperation is the quiet killer in this business. It doesn't walk into your trading room and announce itself. It sneaks in after a string of losses when your confidence is shaken and your judgment is blurred. You take a hit, maybe two, and suddenly your whole approach shifts. You don't even notice it at first. You're still sitting at the same desk, looking at the same charts, but now the way you see them is different. What was clear and obvious before becomes cloudy. Patterns you would have ignored suddenly look attractive. Setups you would have judged too weak now seem good enough. Why? Because you're desperate to win it back. That desperation makes you act when you should be waiting. It makes you force trades, and forced trades almost always end the same way: more losses. Tell me, have you ever caught yourself clicking buy or sell, not because the chart was screaming an opportunity, but because you just couldn't stand the thought of sitting out after a bad day? That's desperation. It whispers in your ear, one more trade, and you'll get it all back. But the market doesn't care what you lost yesterday, and it certainly won't pay you back out of pity. All it does is show you a new set of prices today. If your judgment is clouded, if you're chasing out a frustration, the market will make you pay for it, same as always. When a trader is desperate, he doesn't follow his plan. He can't. His plan feels too slow, too cautious. He convinces himself that extraordinary effort will fix the problem, so he takes extraordinary risks. He doubles his size, he enters without confirmation. He ignores the stop loss he swore he'd never violate. And in those moments, he tells himself it's necessary. He tells himself it's the only way. But deep down, he knows it's just a gamble, and gamblers don't last long in the market. Have you ever watched yourself break every rule you set, while at the same time trying to justify it? That's the face of desperation in trading. Now, let's be honest about what creates this state of mind. It's not just the money, it's pride. Losses hit your pocketbook, but they hit your ego harder. You start to feel like the market is mocking you, like it's personal. You don't want to walk away with a defeat on the day, so you fight back. You start trading not to make money, but to get even. And that, my friend, is the most expensive kind of trading there is. The market has no memory, but you do. And your memory of the loss poisons your ability to see clearly. That's how bleeding money accelerates, not through one big mistake, but through a series of desperate little ones. Think back to the times you dug yourself into a hole. Wasn't it after you tried to fix a bad trade with another, and then another? Each time, you told yourself, just one more trade and I'll be back to even. But instead of even, you sank lower. The hole got deeper. That's because desperation isn't strategy. It's emotion. And emotion has no edge in the market. The chart doesn't reward your need. It only rewards discipline. And discipline is the one thing desperation robs from you. What makes desperation so dangerous is how quickly it spreads into every decision. You might start out with one small mistake. Maybe you moved your stop a little farther than you planned. Just this once, you say, but then the market goes further against you, and you tell yourself you'll hold a little longer because you can't take the loss here. Suddenly, you're sitting in a position you never should have taken, at a size you never should have used, with a loss you can't accept. That's how traders blow up. It doesn't happen in one grand act of foolishness. It happens through a chain of desperate little compromises. Have you noticed how easy it is to compromise when you're already hurting? And don't think desperation only comes after losses. It comes after missed opportunities too. A stock you wanted to buy breaks out and you hesitate. It runs without you. You kick yourself, and now you feel behind. So you jump into the next thing you see, not because it's a good setup, but because you're desperate not to miss again. That trade fails, and now you're bleeding from a wound you never should have opened in the first place. Missing a trade doesn't cost you money. Chasing out of desperation afterward does. You have to understand, the market is a place where patience is punished less than desperation. Waiting may feel uncomfortable, but it keeps your powder dry. Desperation, on the other hand, drains your account and your confidence. Once you've bled enough, you stop thinking like a trader altogether. You start thinking like a gambler at the roulette wheel, throwing chips just to feel alive. And the market loves nothing more than a desperate gambler. It feeds on them every single day. The hardest thing to admit is that desperation is self-inflicted. The market doesn't force you to act. The tape doesn't beg you to trade. You press the button yourself, and when you do it for the wrong reasons, you have nobody to blame but the man in the mirror. That's a bitter truth, but it's also the key to freedom. Because if desperation is self-inflicted, it can also be self-controlled. You can decide to step back, to stop trading when you're not clear-headed. The problem is, few traders ever do. They let the pressure drive them instead of mastering it. Do you ever give yourself permission to just stop for the day after a bad loss, or do you keep throwing yourself into the fire? The best traders I've known weren't the ones with the most brilliant analysis or the fanciest indicators. They were the ones who knew when not to trade. They could feel desperation creeping in, and instead of feeding it, they shut it down. They walked away, cleared their head, came back when they could see straight again. That's what kept them alive. That's why they had money left when the real opportunities came. And that's why most others didn't. Desperation is like quicksand. The more you struggle against it, the deeper you sink. The only way out is to stop thrashing. You stop forcing. You stop trying to make the market give you back what it took. You let go of the need to be right today, and you wait for tomorrow. But waiting is hard. It feels like surrender. That's why so many traders can't do it. They confuse patience with weakness, and in doing so, they trade themselves right into ruin. The truth is, the market will always be here tomorrow. There will always be another setup, another trend, another chance. But you won't be here if you've blown yourself up today out of desperation. Protecting your capital means protecting your state of mind. When you're clear, you can see the tape for what it is. When you're desperate, you see only what you need it to be. And that's the most dangerous blindness there is. Do you know what separates a temporary setback from a permanent failure? It's whether you let desperation take over after the setback. Every trader takes losses. That's part of the game. But not every trader lets those losses turn into desperation, and not every trader tries to claw it all back at once. The ones who do are the ones who bleed out, who never recover, who leave the market with empty pockets and empty spirits. The ones who resist, who control themselves, they live to trade another day. Greed has ruined more traders than ignorance ever could. A man can read the tape perfectly, follow the trend, and have the right stock at the right time, yet still walk away broke because he couldn't control the urge to hold on just a little longer. You know what I mean, don't you? You're in a trade, it's moving your way. The profit is right there in front of you. You could take it and call it a day, but something inside whispers, wait, don't sell yet. There's more to come. Why settle for this when you can have more? That whisper is greed, and it's as dangerous as any trap the market lays out. I've always said the market gives you chances, but it doesn't give you guarantees. When you have a profit, that profit is yours only if you take it. Otherwise, it's just numbers on paper, ready to vanish as soon as the tape changes direction. How many times have you seen a strong position collapse in front of your eyes because you didn't lock it in? How many times did you think, just a little higher, just one more point, only to watch the trend reverse and take it all away? Every trader has felt that sting. It's the tax greed charges, and it's often far higher than the profit you are chasing. You have to understand that greed blinds you to the signals the market is already giving. The chart starts to show exhaustion, volume dries up, momentum weakens, maybe a reversal bar appears. Those are warnings, but greed doesn't let you hear them. Greed convinces you the move is only pausing, that the rally still has legs, that this time is different. It tells you to ignore your own rules, to dismiss the signs that have guided you before. And once you silence your rules, the market doesn't hesitate, it takes back what it gave you. Have you noticed how every time you ignore the chart in favor of just a little more, it ends badly? Here's the truth most traders don't want to face. The big moves don't come every day, and they don't stretch forever. Every trend has an end. Your job is not to milk every last tick from it. Your job is to ride it until the odds shift, then step off before the turn. But greed tells you the end is farther than it really is. Greed whispers that you're leaving money on the table if you sell too soon. And that whisper makes you hold, and hold again, until the profit shrinks and then disappears. A professional trader isn't measured by how much he makes on his best trade, he's measured by how much of those profits he keeps. Think of it this way, the difference between a winning trade and a losing trade is often nothing more than timing. You might have picked the right stock, caught the right entry, and sat through the right move. But if you don't sell when the time is ripe, you might as well have been wrong from the start. The market doesn't pay for being right on direction, alone it pays for being right on both direction and timing. And greed is the great enemy of timing. Do you remember the last time you were right about everything except when to sell? That's greed's fingerprint. Now, there's nothing wrong with holding on to a trend when the signs say it still has life. That's discipline, and that's how you make real money. The trouble starts when you hold after the signs have changed, when you refuse to take what's already a healthy gain, because you want more than the market is willing to give. I've seen men take a 10-point profit and turn it into a 10-point loss, all because they couldn't stand the thought of leaving money on the table. Leaving money on the table is never as costly as losing the money you already had in your hand. Do you believe that yet, or are you still chasing every last tick? Greed also tricks you into changing your plan mid-trade. You went in with a target, maybe a level of resistance you'd sell at, or a percentage gain that fit your system. The stock reaches the target, and instead of selling, you tell yourself, "It looks strong, I'll hold a little longer." But that wasn't your plan. That was your impulse. The moment you abandon the plan, you're no longer trading, you're gambling. The market isn't fooled by your justifications. It doesn't reward wishful thinking. It rewards discipline. And discipline means doing what you said you would, not what you suddenly feel like. How many times have you broken your own rules out of greed, only to regret it afterward? And here's the cruel irony: greed doesn't just make you lose money, it makes you lose peace of mind. When you're greedy, you can't enjoy your gains. You're always restless, always thinking about what you could have made if you'd held longer, or if you'd added more size. That restlessness eats away at you. Even when you book a profit, it feels small, unsatisfying, because greed has raised your expectations beyond reason. So you take bigger risks, stretch your trades further, and eventually the market humbles you. That cycle repeats until you either learn control or quit the game altogether. I want you to think about how many great fortunes have been lost not because of bad stock selection, but because of bad selling. Buying is easy. Any fool can buy. Selling is hard, because selling requires judgment, patience, and above all, humility. It requires admitting that the move is done and that you've taken enough. Greed makes humility impossible. Greed tells you there's no such thing as enough. But the market punishes that attitude every single time. Can you honestly say you've ever grown your account by being greedy, or has it always ended with the market taking back more than you gave? Another danger of greed is how it makes you blind to opportunity. You sit in a stock that's already run its course, squeezing it for one more uptick, while elsewhere a fresh trend is just beginning. But you're too tied to your current trade to see it. By the time you admit the move is over, you've lost the profit you had and missed the new chance too. That's the double cost of greed: lost gains and lost opportunities. A disciplined trader lets go of the old to be ready for the new. A greedy trader clings to what's fading and ends up with nothing. Do you want to be ready when the next real move starts, or stuck in a dead trade because you couldn't let go? Greed can even show up in small ways that seem harmless. Maybe you set a sell limit and the stock misses it by a few cents before reversing. You curse yourself for not adjusting, for not grabbing the near miss. But why did you need the exact number? Because greed wanted perfection. It wasn't satisfied with a near target profit. It demanded the exact top. And in chasing that perfection, you end up giving back more than you should. Trading is not about perfection. It's about consistency. Greed doesn't understand consistency, it only understands more. The wise trader learns that enough is enough. He learns to take his profits according to plan and move on. He knows the market will always provide another chance, another swing, another trend. He doesn't need to wring the last drop out of every trade. He just needs to keep his gains and protect his capital. But most traders never learn that lesson until the market teaches it to them in the harshest way. And the tuition is always high, because greed doesn't go away with one loss. It lingers. It tempts. It tests you again and again. The question is, how many lessons will you pay for before you finally control it? Wealth in trading doesn't come from constant action. That's the hardest truth for most traders to accept. A man sits in front of his screen all day, watching prices flicker, feeling that urge to be involved, to always have a position, to always be doing something. He convinces himself that activity equals progress. But activity without judgment only equals losses. It's not the number of trades you make that builds wealth. It's the quality of the trades you take and the ability to keep the money once you've earned it. Do you really think the market cares how hard you work or how many buttons you press in a day? It doesn't. The market only pays out to those who act at the right time and then protect what they've made. I've seen men who couldn't stand still, who had to be in every little move, every tick up and down. They traded morning, afternoon, and night, and do you know what they ended with? A broker's bill and a broken account. The commissions ate them, the bad trades wore them down, and whatever small profits they grabbed vanished in the noise. Then I've seen other men, quiet men, who waited, who maybe made only a handful of trades in a month, but when they struck big, and they kept their winnings. Which of those two do you think built lasting wealth? The trouble is, most people think making money in markets is about always being right. They think if they're not constantly proving themselves, they're failing. But the real skill isn't being right all the time. It's protecting your stake long enough to be right when it truly counts. The great moves, the ones that can change your account and your life, come rarely. They come when a stock breaks out cleanly, when a market shifts trend decisively. If you're worn down from bleeding money in constant little trades, you won't have the capital or the nerve to take the big one when it appears. How many times have you missed the real move because you were too busy fighting in the small ones? Wealth is about keeping. It's not what you make on paper, it's what stays in your account after the noise is over. That's why discipline is more valuable than cleverness. A clever man can call every twist and turn, but if he can't hold on to his profits, he ends up broke. A disciplined man may not be right as often, but when he is, he takes the profit and guards it like gold. He doesn't give it back out of boredom or greed. He understands that the market will not stop offering chances, but his capital can stop if he wastes it. Do you look at your profits as something fragile, to be protected, or do you treat them like they'll always come back if you lose them? The worst kind of bleeding isn't losing money on a bad trade, it's giving back money you already earned. Nothing cuts deeper than watching profits dissolve, because you couldn't sit tight, because you needed to do something, anything, instead of waiting. That's why so many traders never build wealth. They're too busy recycling the same dollars in and out of the market, never letting them grow. Imagine if you had simply kept half of what you once made instead of trading it away again. Where would your account be now? Wealth grows in stillness as much as in action. Sitting out, holding cash, waiting for the right setup that feels like wasted time to an impatient trader, but it's the only way to stay ready for the opportunities that matter. The truth is, the market doesn't reward the busiest trader, it rewards the most selective. The man who can say no to 9 trades out of 10 and only swing at the fat pitch is the man who gets paid. But saying no is uncomfortable. It feels like missing out. That discomfort is why most traders fail. They want the thrill of constant action more than they want wealth. Do you want excitement, or do you want money? Because you rarely get both in this business. Keeping wealth also means resisting the urge to scale up too fast. Greed makes you press the gas when you should still be cautious. You make a few good trades, you feel invincible, so you double your size, triple your risk. Then the market gives you a normal correction, and suddenly all those winnings and more are gone. That's not wealth, that's gambling. The wealthy trader increases his size slowly, in proportion to his actual gains, not his fantasies. He protects his bankroll first, grows it second. How often have you seen someone win big, and then lose it all because they couldn't slow down? There's another point to wealth. In trading is about mindset as much as money. A trader who sees every profit as fuel for the next gamble never builds anything lasting. A trader who sees every profit as a foundation to be guarded, brick by brick, builds something permanent. The difference isn't in the trades themselves, it's in what you do after the trade. Do you bank the money and strengthen your position, or do you throw it right back on the table in hopes of a bigger score? Look at the men who lasted decades in this game. They weren't the loud ones, the ones chasing every tip or every flicker on the tape. They were the quiet ones, who didn't need to trade every day, who didn't feel less of a trader for sitting in cash. They knew wealth wasn't in the noise, it was in the big moves, and in not losing it afterward. They learned to accept boredom. They learned to embrace the quiet, and that's why they could ride the storm when it came. Can you sit in boredom without forcing a trade, or does the silence push you into mistakes? The market has a way of punishing impatience. You chase small moves out of boredom and you bleed. Then, when the real move comes, you hesitate because you're already bruised, already short on capital, already doubting yourself. That's how opportunity slips by. Wealth isn't just about having the right stock, it's about being in the right condition when the stock appears. The condition of your capital, the condition of your nerves, the condition of your discipline, all of that matters. Desperation and overtrading rob you of those conditions, and without them, you can't capture wealth, even when it's right in front of you. And let's not forget the temptation to withdraw too early. Some traders cash out every small win, treating the market like a paycheck, instead of letting the account compound. They never let wealth build because they're too focused on quick gratification. The real growth comes from holding on to your profits, adding them to your stake, and using that larger stake wisely when the big opportunity comes. But greed doesn't see compounding, it only sees today's craving. And impatience eats away at tomorrow's fortune. So wealth in trading isn't just about winning trades. It's about building a reservoir and keeping it intact.